March 2025. A solar manufacturer in Germany quietly cancels orders. A defense contractor in Virginia adds silver to their strategic reserve. 3 Asian refineries stop accepting new contracts. And in London, the world's oldest bullion dealer implements purchase limits for the first time in 340 years. This isn't happening tomorrow. This is happening right now. And if you don't understand what these events signal, you're about to watch the largest industrial commodity crisis of the 21st century unfold in real time. In the next 12 minutes, I'm going to show you the 3-phase lockdown pattern that precedes every critical resource crisis in history. Strategic stockpiling, export restrictions, price controls. It happened with oil in 1973, with rare earths in 2010, with semiconductors in 2021, and now it's happening with silver. The difference? This time there's no substitute, no workaround, no technological fix. When the lockdown completes, entire industries stop. Let me show you what's already begun that the media isn't covering. Phase 1, silent accumulation. This is where governments and corporations stockpile without announcement. No press releases, no market panic, just quiet, systematic buying that drains supply invisibly. China stopped reporting silver import data in late 2023. Why does that matter? Because when a country that consumes 20% of global supply goes dark on statistics, they're not being transparent. They're hiding accumulation. India's silver imports hit 38-year highs in 2024, not for jewelry, for strategic reserve. The government classified precious metals alongside military assets. You don't do that for an industrial commodity. You do that for a weapon. Russia diverted 100% of domestic silver production to state reserves in early 2024. Not sold, not exported, stockpiled. And here's the part that should terrify you. The United States, the country that invented modern finance, that dominates global trade, has 0 strategic silver reserve. None. We sold it all between 2005 and 2015, every ounce. While China, Russia, and India accumulated, America sold. We bet on paper markets and infinite supply. They bet on physical control. Now look at corporate behavior. Tesla secured 7-year silver supply contracts in 2024 at fixed prices. They locked in supply before the squeeze. First Solar did the same. Panasonic, LG, Samsung, all signing long-term deals with mines directly, bypassing the spot market entirely. When the world's largest manufacturers start hoarding, they've seen the data, you haven't. This is phase 1, accumulation without panic. The smart money is already positioned. The question is, are you? Phase 2, export restrictions and capital controls. This is where countries protect domestic supply by blocking exports. It always starts with justifications, national security, environmental protection, industrial policy. The reason doesn't matter. The result is the same. Supply gets fragmented. Global markets break. Prices dislocate. Let me show you how this plays out. Indonesia, the world's 4th largest tin producer, banned tin exports in 2013. Not forever, just until prices stabilized. Translation? Until we've secured domestic supply and our strategic partners are positioned. Tin prices doubled. Industries dependent on tin faced shortages. The ban lasted months, but the psychological shift was permanent. Countries learned they could weaponize resource control. Rare earth crisis, 2010. China controlled 97% of global supply. Then they restricted exports, officially for environmental reasons. Really? They were building electric vehicles, wind turbines, advanced missiles. They needed rare earths domestically. So they choked off global supply. Prices spiked 10 times in 18 months. Japan stockpiled frantically. The US scrambled to reopen closed mines. But mines take a decade. The damage was done. Now watch what's happening with silver. Russia banned silver exports to countries imposing sanctions in 2022. Mexico, the world's largest silver producer, implemented export quotas in late 2024. Not a full ban, just quotas. Enough to signal that supply isn't guaranteed. Peru tightened mining regulations, slowing production at the exact moment demand is surging. Coincidence or preparation? And here's where it gets darker. 4 South Korean banks stopped selling physical silver in February 2025. Not because they wanted to, because they couldn't source it. When banks with unlimited capital and global networks can't get metal, that tells you physical supply is already locked. China blocked citizens from buying precious metals through banks. They raised risk classifications. They restricted platforms. Why? Because when the state is accumulating, they don't want citizens competing for the same ounces. This is phase 2, fragmentation. Each country secures domestic supply, export channels close. The global market, the one everyone assumed would always function, starts failing. And once phase 2 is active, phase 3 is inevitable. Phase 3, price controls and rationing. This is endgame. This is where governments and exchanges panic, implement controls, and destroy the illusion of free markets. It's not if this happens. It's when. And the warning signs are everywhere. Let me take you back. 1971. Nixon closes the gold window. Foreign governments are demanding gold for dollars. America doesn't have enough. So Nixon ends convertibility. The price of gold, previously fixed at $35, goes to $850 by 1980. That's not a price increase. That's a price dislocation. The paper system broke, physical diverged, and the people holding physical won. Hunt Brothers, 1980. They accumulate 200 million ounces of silver. They demand physical delivery. The vaults drain. Comics panics. So they change the rules. No more long positions. Margin requirements skyrocket. Trading halts. The Hunt brothers are destroyed. But here's what matters. The people holding physical metal, not futures, not leverage, just metal in their possession, they came out fine. Silver crashed from 40 Nyantan dollars to $10 on paper. But physical holders who bought at $6 still made massive returns. The lesson? When the system is threatened, they change the rules. But they can't confiscate what they don't control. Palladium, 2001. Russia delays shipments. Physical vanishes. Futures traders demand delivery. There's no metal. Price goes parabolic. $1,000 an ounce. Traders holding paper contracts get cash settled against their will. The exchange forces them to take dollars instead of metal. And those dollars bought far less palladium than their contracts promised. Physical holders made fortunes. Paper holders learned an expensive lesson about counterparty risk. Now look at what's building with silver. Comics registered inventories down from 100 million ounces in 2020 to under 40 million today. That's a 60% drain. Industrial demand alone consumes 1 billion ounces annually. Total inventories equal 3 weeks of consumption. 3 weeks. When the next shortage hits, when a major manufacturer publicly announces they cannot source silver, the cascade begins. Industrial buyers panic. Governments secure strategic supplies. Investment demand explodes. In the paper market, where 100 ounces of paper trade for every 1 ounce of physical, that market collapses. Here's what Phase 3 looks like when it fully activates. Trading halts become routine. Comics suspend silver delivery. SLV, the largest silver ETF, announces cash settlement due to physical unavailability. Your shares don't give you silver, they give you dollars, and those dollars are worth far less silver than when you bought. Governments implement price controls, not to help you, to manage panic. They cap prices artificially, creating black markets where physical trades at multiples of official prices. Rationing begins. Industrial users get priority. Defense contractors, solar manufacturers, electronics firms. Retail buyers, good luck. Dealers sold out. Mints with 2-year backlogs. Premiums at $100 over spot because spot no longer reflects reality. This isn't fear-mongering. This is pattern recognition, and the pattern is screaming. Why silver is different this time. Every resource crisis has an escape hatch. Oil? Saudis can pump more. Rare earths? Other countries develop deposits. Semiconductors? New fabs got built. But silver? There is no escape hatch. Let me show you why. Silver supply is structurally capped. 70% is a byproduct of zinc, copper, and lead mining. You can't just mine more silver. You mine base metals and hope silver comes with it. Base metal prices are weak. Miners aren't investing. New mines take 10 years minimum. We don't have 10 years. The deficit is now. Recycling won't save us. Silver recovery rates from electronics are under 20%. Too small per device. Too expensive to extract. And solar panels? They lock silver away for 25 years. That's not recycling. That's removal from supply. Substitution doesn't exist. Copper oxidizes. Aluminum can't match conductivity. You cannot engineer around the periodic table. Every solar panel manufacturer has tried. They've all failed. Silver paste remains the only solution at scale. And here's the kicker. Demand is mandated by law. The European Union, China, and the United States have committed trillions to the energy transition. Solar installations must double by 2030 to meet climate targets. That's not market-driven. That's policy. And policy doesn't care if silver is $30, $60, or $150 an ounce. The mandates remain, which means demand is non-negotiable while supply is exhausted. Oil crisis, 1973. Solution? Saudis pumped more. North Sea came online. Demand moderated. Crisis ended. Silver crisis, 2025. There's no Saudi Arabia of silver. No massive deposit waiting to be developed. No demand moderation because industries legally cannot stop buying. This is the first resource crisis in modern history with no structural solution. Only price adjustment, and that adjustment will be violent. What this means for you. I'm not telling you to panic. I'm telling you to recognize reality. The lockdown has already begun. Phase 1 complete. Countries and corporations are stockpiling. Phase 2 active. Export restrictions spreading. Supply fragmenting. Phase 3 approaching. The paper market is on borrowed time. Here's what you need to understand. When Phase 3 fully activates, price won't matter. You won't be able to find silver at any price. Dealers will be sold out. Mints will have year-long wait lists. Banks will stop selling. And you'll be standing there with depreciating currency, unable to convert it to the one asset holding value. The window to act is now. Not next month. Not when headlines confirm what I'm telling you. By then, premiums will be $50 over spot. Physical will be unavailable. The crowd will panic, and you'll be competing with millions of people who just woke up. Physical silver, in your possession, not in an ETF, not in a certificate, not in someone else's vault, in your hand. Where no counterparty can fail, where no government can restrict, where no exchange can cash settle against your will. That's the only position that survives Phase 3. This isn't investment advice. This is pattern recognition. I've shown you the 3 phases: silent accumulation, export restrictions, price controls and rationing. I've shown you the historical precedents: oil, rare earths, palladium, gold. And I've shown you why silver is different. No substitute, no new supply, no escape hatch. The lockdown has begun. Countries are securing supply. Corporations are hoarding. And the average person? They have no idea what's coming. Don't be average. Don't wait for confirmation. By the time everyone sees it, it's too late. Go verify this yourself. Check COMEX inventories. Review export data. Raid corporate supply chain disclosures. It's all public, all documented. And when you see the pattern, when you see Phase 2 accelerating and Phase 3 approaching, you'll understand. This isn't hype. This is the largest resource lockdown of the modern era. And nobody is ready. Subscribe. Turn on notifications. Because what comes next will determine who prepared and who didn't. The people who see the pattern early don't just survive. They thrive. The clock is ticking. The lockdown has begun. The question is, will you act before the window closes? Don't be everyone else.